Good morning. This is Andrew from myinvestorsplace.com. Myinvestorsplace.com is a social network website geared to investors that want to network and want to discuss pertinent ideas, what's happening in the economy and investing ideas. There's blogs, there's forums. We're just starting out. I urge you to join us, grow with us, meet people, meet friends, and learn new ideas. The reason of this post, I want to talk about the distressed debt, what's happening in the States right now. Actually, it's not just the States, it's all over the world. And it's a distressed debt waterfall. And that really shouldn't come to any surprise to anyone, especially to what's happening in the economy. Basically, the fact of the matter is, this is even more than any other time in history. This is about $184 billion worth that's declared right now. But probably there's a heck of a lot more of distressed debt that's lurking around that's really unquantifiable. And again, the point is, with all the cheap money that flowed all over the world last year and the year prior and the year prior to that, with VC firms, VC is venture capital firms, buying companies that paid top dollar for them and think they were going to sell it to someone else for more money, it makes you think. Or how about the developer or the real estate just builder who was basically selling houses to speculators who was going to sell that house to someone else? We knew this was coming, but really we stood there and kind of didn't realize it. And really it's really become pretty much insane what's happening. And the irony is, Dana Perino from the Bush administration yesterday, tried to calm the fears. I guess that's what everyone's job is, to calm down people. But the facts are a lot different. I mean, we're going to be in a very interesting situation, and I guess it's the proverbial yin and yang. There's going to be tremendous opportunities and money to be made in distressed debt in the coming years. I mean, this problem will end. This is not going to be the end of the world, and who knows when it'll end? I have no idea. No one knows, and everyone is looking for that answer, but it really doesn't exist. But there's some interesting facts that I came out with research, because everything is to research, to learn, and then to make your best decisions based on risk and how much it will cost me to see if I'm right, or how much what it'll cost me if it doesn't work. And we have to think in those terms. And these large levels of distressed debt, really, what they've always done is they're more of a leading indicator. They've preceded record numbers of bankruptcy filings, and default ratios have peaked in the past, usually anywhere between 12 to 24 months after these distressed securities ratios reach their heights. And the level of junk debt or distressed debt and the classification of distressed securities and debt, are more so as it's a leading indicator of what's going to be in 2009 and maybe even 2010 and maybe even more so. This really doesn't have to end in a year or 6 months or 2 years. One has to look, or can look, at Japan. It's almost 20 years they've been in this problem. From 1989, take that back, up until now. Their stock market was at 39,000. Now it's probably at 11,500. Anyway, let me give it some more facts, just to put some more, more material in this, as opposed to just my opinion, which really doesn't mean anything. No one's opinion really does. The total amount of distressed debt has grown 11% since the last bankruptcy boom. And so what does that really mean? If you extrapolate it, there was a report I read, I believe it was on Bloomberg. Bloomberg's a great place to research, and you can do searches, that this suggests that there's going to be about another $100 billion in just 2009. And that really what the scary point is, that what this really means is that 1 out of every 3 junk bonds is trading at a distressed level right now. And then you say, well, where does that leave us? You look at AIG, you look at Lehman Brothers, you look at Fannie, and it's just, the scenario is absolutely scary. And let me clarify something. What is a junk? What's considered junk or distressed? It's really when the interest rate is 1,000 basis points above the treasuries. That's your basically line of demarcation. So now you take this into account, again, vis-a-vis Bloomberg, which is a great resource. 33% of the junk bonds that are floating around, they're not worth the paper that they're written on. And you know, it goes to a point where I'd also suggest you read some of the material from Nouriel Roubini, who was in the Clinton administration, and he's a professor at NYU. He was a forerunner of this crisis, saying what he anticipated what could happen. And his estimate of losses now are coming to the tune of about $2 trillion. I mean, these are mind-boggling numbers. Again, I want to reiterate a very important fact. I'm going to leave you on a positive note, that the world's not going to end, that this will end one day, but more so for prudent, smart investors, there's going to be a fortune to be made in the distressed debt field. And the reason I'm bringing this out is, I mean, what I strive to do, I made this site, this social networking site for investors called My Investor's Place, a forum where like-minded investors can share ideas and learn, network, meet people. And really, that's what I'm encouraging you to do, is to join us, come to us, post your blog, post questions, post your thoughts, let others interact with you, learn. Because you know what? This is going to be a great time for investors. This is Andrew Abraham, again, myinvestorsplace.com. Thank you very much.